How are we doing? It's very yellow in here today, isn't it? Oh, there we go. That's lightened up. Always comes on very yellow for some reason, my light. How is everybody? Ooh, where's my chat gone? Morning, Ian, Christian, Monkey, JC, Mark, Gregors, MS, Kenley. How are we doing, Virginia? So, Monday. It's Christmas. I'm in Christmas mode now. My son has his birthday in December, at the beginning of December, so we can't actually start Christmas until his birthday's done. So, officially now, Christmas. Right. So we just had the CPI figures for the Swiss franc come out this morning at 7:30. We've had a very big spike to the downside on the Swissy, as you would expect on negative CPI. So I've just got out of some US dollar Swiss. I've just done a bit of work this morning on all the Swiss franc stuff, which there isn't a lot of, but so US dollar Swiss. I took an aggressive drawdown control position on this one on Friday late. Yeah. 1st of December. Where are we? 4th, 3rd, 2nd, 1st. Yeah, Friday. So late on Friday, I took an aggressive drawdown control on US dollar Swiss. That one there, which I've just got out of this morning. There we go. So one of those was mine. One of those was taken by the EA. So I wasn't obviously trading Friday afternoon live on the stream, but we had a massive move on Friday, just huge move on Friday. CAD Swiss just hit ADR as well. So this went into drawdown quite quick. I went from I banked 1% on Friday. And I was in, I think it was 2.2% drawdown or something. It was like, oh, right, this is nice. So going into the weekend with a nice small drawdown. By the end of the session on Friday, I was down at 8% drawdown again. So it went from 2% drawdown to 6% drawdown on Friday afternoon. Huge moves. Obviously, the market can't sustain that. So it's bounced. So took an aggressive on that one. I took an aggressive on something else as well. One of the other pairs that was in drawdown. Euro Swiss. So Euro Swiss got out of that this morning as well. So that was the aggressive drawdown control position I took. The EA again took one on this morning on that one. So I got out of that one, done some drawdown control. So basically just done some drawdown control this morning on a number of pairs. So I've banked 2.75%. Drawdown's been controlled back down to 2.71. Lot sizes are all down nicely. So yeah, everything's just normal now. Just waiting for stuff to play out. All good. Morning, Yoko, Peter, AZ. So news this week. We've got 4 minutes to the open. We just had that CPI figure. That's a big miss. Well, not a big miss. It's a much faster than expected drop. Remember I said with these inflation figures, the reason we're putting our interest rates up is to control inflation and bring inflation down to target. Target is 2%. When we start to come down too fast, they have to reduce these much faster than expected. Reduction in interest rates is negative for currencies. So as CPI drops faster than expected, it puts pressure on that happening. If that's going to happen, we don't want to buy that currency because long term it's going to drop. Therefore, the currency weakens. So CPI figures down equals currency down. Interest rates down equals currency down. So they were expecting the Swiss to get a disinflation situation where it hadn't gone up, hadn't gone down, and we actually got negative 0.2 month on month. So that's coming down too fast. They are already below target with tiny interest rates, so they don't want it coming down too quick. The Swissies are happy to have zero inflation. So they have lower targets than us as well. But so drop on the Swissy. Other news, we've got Lagarde speaking this afternoon, and that's it. So we've got CPI for Tokyo, for Japan overnight. Tomorrow, we've got the rate for the Aussie. So that's the biggest mover this week. Then we've got to start off the week. Then we've got PMIs tomorrow afternoon. We've got GDP overnight. And then we've got Bailey speaking on Wednesday. It's the non-farmer figures, and then we've got the rate for the Canadian on Wednesday as well. So 2 interest rates this week, and obviously CPI figures as well. Unemployment claims for the US on Thursday, so that'll be a big mover. And then we've got the unemployment rate, which is the biggest mover of the week, on Friday. I say the biggest mover of the week, apart from interest rates. And these will only be big movers if they do something different than forecast. And if they do something different than forecast, i.e. if that CAD comes out at 4.75, you can kiss the CAD goodbye. So we will see this week. We get into those points where the banks are starting to go, holy crap, this is coming down quick. So yeah, we'll see. So that's the state of play at the moment. We're extended on ADRs on lots of stuff at the moment. We'll look at those in a minute. Just looking at the DAX. So DAX, obviously, on Friday. These indices, I don't know where it's getting all this power from. These indices are just not stopping. They are like lunatics at the moment, apart from the NASDAQ, which had a really bad day. NASDAQ's totally out of sync with everything. Look, that's the first time I think I've seen for a long time the S&P have a whacking great up day and the NASDAQ do the total inverse. Just doesn't happen. That's so unusual for them to do a completely different thing. They're really going out of sync. The Dow, obviously, another massive up day on Friday. I didn't know, did anybody trade the opening range on Friday? I didn't even look at them. I don't know what they did. They look pretty damn good to me. But it depends. I don't know whether you got hedged or what. But yeah, huge moves up. So this morning we're working with the DAX gap down. So we got a nice gap fill to the upside to target with an upside break. So if it does go up this morning, be looking at that and obviously double topping. But you know, we've got a gap fill to complete from Thursday going into Friday as well here. So that's your downside target, which is 150 ADR. So you know, so there you go. Market's open. It's taking the 15-minute opening range, going short. So upside target gap fill there. So downside target gap fill is obviously just below yesterday's low because it's a gap, which is beyond ADR. So we'll see where we go. But yeah, so big moves on Friday. We'll have a look at all of that in a minute. Big block of RSI on the euro. So euro last week, obviously, this all came about on Friday from the ECB. Go back to Friday's news. There we go. So basically on Friday afternoon, Villeroy said disinflation is faster than expected. Absent any shocks, rate hikes are over. So absent any shocks, no one else is getting any shocks on CPI. So basically what he was saying on Friday was kiss it goodbye. Basically, that's the end of the euro rate hikes. So if it's the end of the rate hikes, there's only one way for it to go. Yeah, it's not going up anymore because they're not going to hike rates. So it's a case of when. So the market, obviously, when that came out, was like, yeah, okay, don't want the euro anymore because it's coming down at some point soon. So all the long-term speculators have started to shift positioning on it now. So we'll see it start to trend down. 125 basis point of interest rate cuts in 2024. So they're factoring in 5 interest rate cuts in total at the moment. Which will bring the euro down to 3.25. No, or did he say one? Yeah, 3.25 by the end of 2024. So we will probably see all of them start to do the same. We've got 2 interest rates this week. We've got the Aussie and the CAD. So unlikely they will go this week. If you look at the inflation figures, though, coming down pretty damn quick, aren't they? So the Canadians actually could warrant a cut, but they won't yet. It's usually the US that goes first. They do everything first. So I doubt the euro will move before them, but we are in totally different times to the past. So Who knows? Anything can happen. So that's why the euro dropped so dramatically. All these euros absolutely collapsed. So I didn't really look at what the ADRs were, but they were huge. That's 225 ADR. ADR, and that's 100. That was a 236 pip move. Pound odd ADR. So all this lot quite possibly will pull back today. And then continue on its merry way down. So how far it will pull back, whether it will do a V-shaped recovery or whether it will just do a partial pullback, we'll have to wait and see. But look at support resistance, look at propulsion gaps. Yeah, that's where my target is on this one long, because I got in long on this on Friday because it's an RSI extension on the hourly. So that's where my target is. Going to find resistance at previous support. Right, what's DAX up to? Not a lot. Sitting around inside the pre-market range at the moment. We got 1 minute to this candle close. Morning, everybody else. Haven't said hello to Day Trader FX, Lippy, Martin, Peter. I wish I had the balls to hold. I am still failing on learn how to live with drawdown. I panicked and closed a 4% loss. I was only 7% in drawdown. That's just a normal day at the office, 7% drawdown, Peter. That's just trading. Yes. You need to... set yourself a little rule. I will not close anything until it's 10% in drawdown on my portfolio. Yeah. All I can really recommend on that. Look at every instrument individually and look at your portfolio as a whole. Yeah. So set yourself a little alarm bell at 10% to start off with, maybe. And at 10%, you close no more than 50% of your worst position. Something like that. Yeah. You've got to this is a good lesson, right? In what happens after a big move. Remember the bootcamp, remember elastic band theory, yeah? This is elastic band theory playing out. That's all it is. If the market does that, it has to do that because these people are in short, and if they want to make money on those trades, they have to go long. You cannot take profit like this position here that I am long on, right? If I want to take that profit, I have to short the exact same amount of lots that I have long to make that go down there. Yeah. This is why elastic band theory works. This is why RSI extensions and position trading works, because the banks and institutions are moving markets up and down, taking profit. Yeah. If something's pushed down 20% drawdown in your account, be damn sure within a few days most of that's going to disappear again. Because if it doesn't, these guys don't make money. Their job is to make money. That's what it does. It's difficult. It's a difficult mindset. You're shifting completely mindset from not taking losses to, or rather from taking losses to not taking losses. It's a difficult mindset shift. But that's a great lesson. Now you know. Now you know. Morning, PM. Morning, Amy. Morning, Dion. Gold moved a lot overnight. Yeah, I don't trade gold. The hell was that? The hell's that? $400 ADR move at midnight-ish. Don't know. I'm just checking another broker. Yeah, don't know. I've no idea what that is. Nothing to do with the US dollar. some massive order gone in on gold. Well, it's not, is it, though? It's not a massive order on gold. Look at it. What it is, it's like, it's a green to red move, isn't it? That is one of the cleaners in Barclays, like hoovering around, and some traders left his computer on, and she's gone to wipe the keyboard, and she's accidentally hit the buy button, and she's walked out because the monitor's turned off. And basically, he's come in and gone, "What the hell?" And he's reversed the position. That's basically what it is. It's a cleaner. No idea. No idea. US dollar CAD. I can look at US dollar CAD on a sec. I just want to see what the DAX is doing. So, so there's your 5-minute opening range on the DAX. Very lackluster this morning. Not a lot of volume coming through at the moment. We'll see where we go, but not a lot of movement on the DAX. We'll have a look at that in a bit. US dollar CAD. So that's undoing Friday's move at the moment, coming up into resistance. So we got this area here and that area there, which is the previous day's low, which is just beyond ADR. So that is a previous support resistance area. So hit that, hit it, hit it, hit it. It's that area there. So this whole area here is resistance upside. So the US dollar is very difficult to call at the moment still. I still haven't really got any confirmation as to whether the market is long or short on this US. It seems to me now that they are wanting to short the dollar, especially with what the indices are doing. The thing that worries me is what the indices are doing, because we normally get a Santa rally, and that couple of weeks before Christmas is hard to really say for sure what is going on. We are coming out the back of an entire month rally, and we are rallying again. It's literally not stopping. These going up like this means the US dollar has to come down, because the money to make these stocks go up has to come out of the US dollar. You buy stocks in US dollar, therefore the US dollar M2 money supply drops, everything drops in the US, and stocks go up. So while this is going on, you've got to say you've got to be short in the dollar. However, remember elastic band theory? That's the most stretched I've seen it for a long time. When this comes down, that dollar's going to pump like hell. So it's very difficult to call the US at the minute. What I'm worried about is a little squeeze on the way up to Christmas, which would be annoying, but we will see. That's still kind of inside the pre-market range. US indices are dropping at the open. What the DAX is doing this morning, it's kind of just sitting around. So yeah, don't know the US dollar CAD at the moment. I'm not in it. I haven't had any RSI extensions since here. So that was the last entry there, which was a quick in and out. The only reason I got out so fast on that was because of that double bottom resistance, which I got out just before that. Very small profit, but it was the right thing to do. Hedged on the DAX. DAX is driving me mental at the moment. It literally cannot get any volume at the open. The volume just seems to be coming along with US indices at the moment. It's just not got any legs of its own. It's really annoying. But anyway, get phases like this. So yeah, just be careful. Obviously, it's in a big downtrend at the moment, so it's a short. So somewhere around here, ADR today, this support resistance would be a lovely little short area if you want to take it intraday. Bear in mind, though, obviously news. So tomorrow we've got the Aussie rate, and then on Wednesday we've got the CAD rate. So on Wednesday, the outlook for the Canadian dollar could shift completely in one way or the other. So if you're going to get into anything against the Canadian dollar and you're looking to hold it for more than a couple of days, everything changes on Wednesday. So got to be a bit careful with them. Morning Post. Morning Dion. That's why you don't position trade commodities. Yeah, this is exactly why I don't position trade commodities. But that, I mean, that's just ridiculous. The 748 pip move. ADR on gold is 214. 3 times its normal daily range, literally within 10, 15, 20 minutes. Somebody, somewhere, made a lot of money there. When you talk ADR move, is it on the time frame you're on or is it on the daily? Wayne, what does ADR stand for? Go and watch the video on the website. Average daily range. Doesn't matter what time frame you look at, it's the daily range of the instrument. Doesn't change on time frame because it is just the daily. Yeah, there's a cleaner now in Barclays who's now a multi-millionaire. She just doesn't know it yet. Euro New Zealand long? I don't know. After the Euro move on Friday, obviously, probably want to be short in the Euro long term now. I mean long because it's an RSI extension from Friday. Sorry, from this morning, I got into that one. There. So it's just about to TP. Actually, it's ADR. I'm just going to bank it. It's coming up to resistance. Euro odd as well. Actually, what I'm going to do, there you go, Euro odd ADR. What I'm going to do is I'm going to bank both of these. So Euro New Zealand and Euro odd, pretty much the same trade. The Australian and New Zealand move together. There you go, Euro New Zealand ADR. So these two guys move at the same. They move the same. It's the Australian and the New Zealand. They're kind of one, and they're moving against the Euro. So I'm going to take both of these off because both of these together is pretty much 0.5%. So I'm just going to bank those two. I don't really want to be long too much Euro after Friday. So coming up to Christmas, I want to try and get as flat as I can before Christmas. So I'm just going to close that one out and the New Zealand. It's quick in and out, easy money. Just take it. Stick it in the bank. I might do a bit of DD control actually while I'm here. I'm going to take that furthest US dollar Swiss off just to bring the average down closer. So average, so I'm now basically within half an ADR. I've got 2 positions on. Third one will go on a pullback. In fact, I could close the whole lot out now and walk away and go and finish for Christmas, couldn't I? Really? Tempting. This isn't going anywhere. Right. So we'll look at the ADRs. Took out all-time highs, I think, on gold. Could be a massive stop run by the cleaner. Is that all-time highs, is it? Yeah. So the last high we've got is there. So I mean that these 3 highs are obviously the same basically, but did that happen this morning then? Yeah, so Friday we closed just shy of that level. I don't know what that move is. It's obviously to do with that high. It's probably liquidity running. The thing with this level though is what you'll find at this level is because it's really, really old. Yeah. So this high here is going back to May this year. That's March 22. and that is obviously 2020, back in COVID times. So you'll have people looking to short this, yeah. But and obviously, if there's institutions shorting this as a quick bounce play, they may well get out of the position and flip on the other side. So this is probably just a load of liquidity by banks sitting at this level, trying to short it, trying to long it, trying to get trade on, and trying to get a direction going, and basically bots going nuts. Basically, there's nobody sitting here with stops here. Yeah, not from here. That's gone. That's dead. You're out. Yeah, you're out. You're out. Yeah, you've been holding that for months. You're out of that as it's coming back up. There's no way, if you got in anywhere near that triple top, you let this come all the way back to break even. You're out. Yeah, there's nobody short on it. Limit orders will trigger there, and there'll be orders in both directions there. There'll be breakouts there. There'll be shorts there. But that's obviously just algos going mental, playing with each other in the banks. It's all undone. So right now, do you want to short that? That's the short of the century, isn't it? You look at the last 2 times, short gold, hold it for 3 months, pay your mortgage off. Or get run over immediately and lose a load of money. One or the other is going to play out. When you take aggressive drawdown control, do you exit manually or via the EA? I do it manually. Aggressive drawdown control is all done manually. The EA does not do that. You only do aggressive drawdown control if you are in a position where you think it's at exhaustion point and you want to do some damage on your drawdown. Yeah, that's the whole point of aggressive drawdown control. When you see a move like the euro on Friday, yeah, look at what happens when the market does that. Yeah, that's what happens. That's just what happens. It's elastic band theory. It's taught in the bootcamp. So when I see a move like that, 200 ADR after a drop, it's usually exhaustion. After exhaustion comes a reversal. That is when you get on your aggressive drawdown control positions. The EA, there's too many factors to make an EA do this. There's too many variables. Yeah, I could build aggressive drawdown control into the EA, but then everyone would say, well, what settings do you use? I don't know. I use my eyeballs. Basically, you can't pick. There's too many reasons to do aggressive drawdown control. Yeah, this would be the ultimate aggressive drawdown control. If this thing pushes down to there, that would be an amazing one because you've got confluence. It's all to do with confluence. But confluence for other people is there. Look, the reason this thing bounced is because everyone was seeing support. Obvious. That level there is a whacking great support. That's where it's bounced. It's never going to bounce to the pip. It bounces around the area. That is a great bounce point as well. But you can't teach an EA to find those levels because it would go, well, it's invalidated. Well, then you say, well, if it's invalidated once, don't do it. Well, how many times does it need to bounce then? 3 or 4? Well, I don't know, use 3. So then when it doesn't do it at 4, you don't get the trade on. You know, there's too many variables. You're a trader. You've got to trade. You can't get an EA to do everything for you. You could, but not something that I would try and attempt. That's for people like Einstein. I watched Oppenheimer last night. Morning, Neo. Euro Swiss still long then? Yep. Just about. I'm out of half. More than half. I could get out the whole lot, to be honest. I've got very little drawdown. And I'm thinking about it, to be honest. In fact, you know what I'm going to do? I'm going to scrap the Euro Swiss. You made me do that, Peter. Reason being is I've got US dollar Swiss long. Yeah. So the exposure on the Swiss, I'm just trying to limit my exposure on the Swiss because I've got exposure on the euro and the euro will move with the Swiss. The fact that Swiss franc has just had negative news, basically, the US dollar Swiss will basically be my payday on it. I'm just trying to limit my exposure. It's getting close to Christmas. I'm literally going to be jacking it in a week. So I don't want to get into anything that's going to get into really horrible squeezes going into Christmas. I want to try and limit my exposure a bit. So, very chatty movie, but worth watching once. Yeah. I don't know what the runtime on Oppenheimer is, but I'm pretty sure I started at about 7 and I went to bed at gone 10 o'clock last night. And there is a lot of talk. It's a lot of talk for one big moment where they drop the bomb and it blows up. And it's like, whoa, that was in the trailer. The rest of it is 2 hours, 45 minutes of talking about science and equations. Some of it in black and white, some of it in color. But it's got every famous actor you've ever heard of in the history of acting in it. It's one of those films where they've basically gone, okay, let's just spend 700 million on wages and we can't now afford to film it in color, so we'll do it in black and white. It's one of those. It's a good film, but I don't really think I needed to know the story of how it was invented. But anyway, go watch it. Right, let's do some analysis. DAX is stuck. Hedge long, stuck. Not going anywhere. DAX is, I'm falling out of love with the DAX at the moment. It's just, was brilliant. I think I'll watch John Wick instead. Yes. Now, John Wick is much more fun. He knows what he's doing. He also trades as well. Not a lot of people know that. It's his job. He's not really an assassin. He's a trader. Are there typical squeezes around Christmas? Why not? Why close out everything so early? Just to keep on top of my drawdown, really. The market will do what the market will do. At Christmas, there's absolutely no point in trading past I think it'd be the 16th this year. Yeah, 15th. So end of next week is the 15th. Friday next week. So that's when I will stop trading. That week, the week running up to Christmas, the bankers take it off. There is still a lot of trading going on. Markets are still moving. But the week before Christmas is either like that, hideous, you can't do anything with it, or it's like that. And you're just all over the place because there's no liquidity in the market. So it's either liquidity and nobody making a move, or light liquidity and nuts. It's just a pointless time to trade. So I always try and get as flat as I possibly can 2 weeks before Christmas, and just that's it, done. I take 4 weeks off of Christmas, basically. Can't trade. You can trade. You can do what the hell you like, but it's just hard, really hard work. So there's been a few squeezes over Christmas. US dollar Swiss, I remember one a few years ago. I'd have to look at the daily chart, wouldn't I? A few years ago, US dollar Swiss, I think it was that one there. No, that's July. That one there, look. So this was the end of November, yeah. And what happened was, that's the end of December. US dollar Swiss in December just went vroom, 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 vroom. And then just before Christmas, you got a little bit of light, and then it just went like that. So basically, it just sat me in drawdown. I was sitting in 7% drawdown or something ridiculous for the entire 2 weeks of Christmas. Because the market, don't forget, the market moves in quarterly cycles, yeah? So this is what these moving averages are showing on the chart. They're showing you the monthly cycles and quarterly cycles. This is why we use the 24 and the 72 EMAs on the daily. Yeah, 72 is number of trading days in a quarter, 24 in a month. So what the market is doing is not only closing end of month, it's closing end of quarter, and it's closing end of year. When they've made that move to get their books balanced, the bankers are off. They're done. Yeah. If you are caught at the end of that move and you are trying to get out of it, you're not doing anything. You're stuck. So you can't tell when it's going to be, but there's a period that's going to come up, and all of a sudden the market you're going to think, oh, it's going long, oh, it's going short, oh, it's going long, oh, it's going short. And then 2 weeks later, you're going to be going, this thing just can't make its mind up. It's because there's nobody there. No one's trading anymore. So I just try and avoid getting stuck in it, and it's, if I can get out of stuff a week early and take an extra week off, brilliant, do it. This isn't a job where you get paid every month. You get paid yearly. It's just you take money when you need to take money. It's not, I don't need to be sitting here going, oh crap, I haven't done 12% this month. I can just take that and go. Yeah. Try the FTSE. Yeah, I'm going to do the FTSE. It's on my list to do. It was on my list to do on Friday, but Friday I went out and didn't get back in time, and I haven't managed to do it. So I am going to set an account up with a FTSE broker, and I'm going to start looking at the FTSE. The DAX is great. The DAX has lots of runs where it has beautiful breaks and it's really clean and it works excellent. All indices are the same. I hear people in Telegram going, oh, I'm not trading that because it doesn't work. It does work. You're just looking at it over a period of time which is too short. Yes, for a couple of weeks, it might not have much run. It might make a loss for a couple of weeks. But then if you don't trade it in the 2 weeks afterwards, where it makes 74% gross profit on your account, you're stuffed. Yeah, this is trading. Trading doesn't go like that. Trading goes like that. Yeah. Yeah. If this is where you go and trade the DAX and go, oh, the DAX is crap, doesn't work with the opening range breakout, you miss that. Yeah. It doesn't work day by day. It's an edge which plays out over a year. Yeah. If you just look at it over 2 weeks and go, oh, I'm not going to do that because it didn't work for the last 2 weeks, there's no point. That's not what trading is. Trading is a long-term thing. So you just got to, you get frustrated with it. I get frustrated with it when it doesn't play ball. But then the days where I'm sitting here and I go, oh, 30 minutes in, I've done $5.5 grand. Thank you, DAX. We forget about those days, don't we? We just concentrate on the ones where it's like, oh, DAX has hedged me again. Swings and roundabouts. So we're running for the gap fill. So exit opportunities are at 2R today, bit tight. So options at 2R are to get out of the longs and assume that we're going to get a bounce and then we can exit the shorts. If you're going to do that, get prepared to re-hedge at the highs. So we'll see if we can get there. That's probably what I'm going to do today, to be honest, because there's not a lot of volume in this. Unless it comes and hits that really hard and fast, and then it might make a different decision. But I'm going to watch it and see what happens. See where we go. Morning XR update.news. Imagine the movie trailer for that. John's given it all up at a chance to become an FX guru. Yeah. John Wick does Forex. Have you heard of NASDAQ watching? Witching, yeah. Witching is a, you get a triple witching. I can't spell witching. A quadruple witching as well you get. So if you want to learn about witching, go and read that. Triple witching, quadruple witching. So it's basically to do with options expiries. On witching, triple witchings, you get ridiculous days. Was it a triple witching on Friday? If it was triple witching, that's why. I don't really pay any attention to them personally because it doesn't affect me. If the market does that on a triple witching, what's it going to do afterwards? Bring it on. The more you squeeze me, the better it is. Yeah, just done that this morning because you squeezed me on Friday. It doesn't affect me at all. I'm not trading. In intraday trading, yes, you need to be aware of when those dates are coming up. Yeah. Peter, well, now I panicked more, so closed everything with 0.9% profit. In 4 months, the account is 23% up. Considering started in summer with horrible September, Peter, you're complaining about being 23% up in pretty much a quarter, which is what? 100% return on a year? Most traders are struggling to get break even. You may have made a balls up on Friday, but it was a balls up that learned a lesson, and ta-da, there you go. Up 23% in 4 months. You can't really go wrong, can you? But again, this is what I was saying about short-term views. These people who are like, oh, I'm not going to trade those indices because they don't work. You've only watched it for a couple of weeks. Yeah. The people that do the bootcamp and then go and try the bootcamp and immediately go into 7% drawdown on their account within 2 weeks and they go, oh, screw that, I'm not doing that. They missed that move that paid them 7% the opposite direction. Patience. People have no patience. You need to get your Lamborghini this week, because that's what everybody shows you in the courses. People that sit there and actually figure it out are the ones, and they sit there and watch it and haven't got to earn a Lamborghini money in a week. They're the ones that are those percentages on your broker. So when your broker says that 75% of customers lose money, those are the ones chasing the Lamborghinis. The 25%, which seems very, very high to me, but anyway, are the people that are not getting in with Lambo money and losing it. Us. I know, even my ex was saying you're never happy. Yeah. We'll take December as recap month and watch the boot camp. Yep. Do that. Watch it again. Every time you watch it, it's the same as everything. I've watched the boot camp back myself, and I learned things from myself I've forgotten. My confusion was scrolling through 28 ADRs on TradingView using 10 period, changed to full team, but could not find a match. I would have expected daily momentum on all platforms to be very similar. No, totally different. Every broker quotes different prices. Never going to get the same. Trade your charts, Wayne. Yeah. Stick the indicator on your charts with your broker and pay attention to that. It's right. Because there is no right and wrong. When this thing gets to 100 ADR today, everyone that shorted it thought it was right. When it got to 125, they thought it was right. When they got to 150, they thought it was right. Didn't get to 175, so the people still waiting to take that one are sitting there waiting now, and they're missing that move. Yeah, it's a line on a chart. It has no meaning apart from measuring how far this has moved based on what your broker has quoted you in the past 10 days as a price point. Whether that is right or the other broker is right or the other broker on TradingView is right, they're all right, aren't they? They're all wrong. What are they? They're just prices quoted. This is a completely random piece of information quoted by a different company to the one that you're looking at. It's just what it is. Trade your charts. Don't trade anybody else's. If mine is not the same as yours, who gives a crap? Trade yours. Or trade mine. I don't care which one you trade. They're both going to have exactly the same probability when you get to any level of working. It's either going to hit that level and bounce off it, or it's going to hit that level and fly through it. The odds of every single line on this chart is 50-50. When it got to that support, the odds were 50-50. It worked, and then it failed, and then it's worked again, depending on where you put that line. All random. This market is random. There is no way of forecasting anything. It's random. Did I get triggered on euro yen? I'm not trading any yen pairs, especially in the run up to Christmas. You would have got triggered, yeah. If you were trading it with EA, you would be in long today. Nice W forming there. It would be pushing up into there or there. One or the other. It's a monthly level as well. So that's a support bounce this morning. Pushing up into there. Or, so I mean, it doesn't matter, does it? It's one or the other. Don't know. I've always used ATR, which does, of course, vary on timeframes. ATR and ADR are the same thing. ADR is the average true range on the daily chart. Sorry, I'm up so late, everyone. Have you already done Euro US dollar? No, I haven't done anything yet. I've been waffling all morning. Euro US dollar. I am short at the moment. So looking for it to come back down into propulsion. So I've already banked on this. So that was the initial entry somewhere back there. So that was the initial entry there on that RSI extension. We went sideways for a week. Then we had the CPI figure for the US dollar, again weakening the US because CPI was down. Scaled in, 2 more. I've taken these off and banked, so it's actually already banked me 1% or so. So I'm looking just to get out on these 2 last positions at a break even, basically, if it can push down into there. So just getting out before that support area, because it's already paid me. So a break even exit's at a profit. DAX gap fill just complete. So watching price action up here for a potential exit on the DAX. So see how we get on at Friday's high, basically, and see if we'll have limit orders triggering at this level. It's whether there's a lot of buyers obviously this morning, so it's whether or not they get just run over or whether we actually get a bounce at that level. That's obviously a weekly high as well because it's last week's high. So So 150 or 175 ADR today is that high. I'm pretty sure that's what we're aiming for this week. So we may well just slam straight through that level, but we might drop from here. So basically, you could literally hit the short button, hit the exit button on these longs now. And then obviously if you're using stock index Hedge EA, it will then place pending orders down there to try and get out if you're using aggressive exit mode, to try and get you out of the shorts on a pullback. But if it breaks that level, I would want to re-hedge it. So just looking for clues basically for price action as to whether or not there are limit orders triggering at this level and whether we're going to get sellers stepping in. At the moment, it looks like it's just going to break straight through and go, but we'll see. If it pushes up above that level and then we close back down below, obviously that would indicate that the limit orders have triggered, and we're looking to drive price back down from this level. So that would be the exit and then hedge back above that candle, whichever is formed, but we'll see where it goes. Right, I will do some FX at some point. ATR includes the gaps, ADR excludes them. Yeah. At the end of the day, it literally is just numbers on the chart. So it's lines on the chart. Yeah, with my broker, including gaps and opening the charts at 7 a.m. in the morning instead of 1 a.m. in the morning, because the data is going to be different on each broker. This is on average what price gets to. So this broker here, the ADR is at 163.38. Yeah, if your ADR on your broker is there, use that because you're trading this chart with this broker. So you use that data. You don't use my data with your broker. Different. And hopefully that helps to demonstrate the fact that whether I press the buy button there or you press the buy button there, what are we both doing? Reacting to a trade setup. What is the odds of that working and that working? That. Yeah. we're basically pressing a button because a line has appeared on a chart and price has hit that line. Yeah, your odds are exactly the same as mine. Your chances of the trade working are exactly the same as mine. That line means nothing. That line tells me where usually price gets to. Doesn't tell me anything. Look at Friday. We got 300 ADRs. 100 ADR made nothing on Friday. Fundamental difference. It's just a line on a chart. But it's a line on a chart that works a lot. That's why we use it. Do you think we've already had the Santa rally? No. Santa rally is Christmas. Santa rally happens in December. Santa rally is just a name they give the. It's all it is. It's the end of year sell-off. So basically, as I said earlier, the banks and institutions use monthly, quarterly, and annual reporting, and 6 monthly, but we don't really pay much attention to that. So all they're doing is they're balancing the books end of year. So what I'm doing, they're getting flat. Yeah. And they will be positioned usually short in the run up to Christmas because of the way that quarters fall. They will be buying into and profit taking on the quarter. So in November, you're profit taking on the quarter usually, and then you rally into Christmas. That's all it is. It's literally, we call it the Santa rally because everybody makes money, the stock goes up, everybody's happy. That's all it is. It means nothing. We didn't get one last year. It was a Santa depression. But we don't normally have a November rally, which is unbelievable this year, going into Christmas. What the hell's going to happen? No idea. It's this market, since COVID, this market is not normal. Nothing is normal since COVID. Everything is different. ADRs are different. RSIs are acting different. Everything's different. Market's changed. It's like Oppenheimer. That's what Einstein said to Oppenheimer. Basically, it's going to change the world. Yeah, you invent that bomb, it's going to change the world. Yeah, you have COVID, it's going to change the markets. That's basically what's happened. We are butting into the high on the data. So I will do some analysis on FX. I'm just, this is a key level, obviously. So just want to see what price does at this level. See if the buyers can get through. So we've broken the highs. Weird. I was just watching my chart and I'm not hedged on the DAX on that platform. How close was that this morning? Oh my God, look at that. Right? Look at that candle and look at the entry, right? My other broker over here, I'm not short. I'm long only because that didn't trigger that order. Look at it. It is literally to the pip. Pushed down, triggered, pushed up. The spread over there, same broker, Robo Forex. The spread over there didn't get me in. The spread here did get me in. Difference between that is now a 1.6% profit. I've just banked there at 2R. There. See what I mean about lines on charts? That one just made me 1.6. This one I'm hedged. Same broker, same instrument, same EA, same settings. Everything identical. Win, loss. That close trading makes absolutely no difference where a line is. Okay, so we've broken through. So if this is going to break now and hold above this high, we want to look for two things. Price action bearish, meaning that the limit orders have triggered and pushed back from this level, in which case then you've still got the option to exit your longs and then re-hedge above the highs if you want to, and then hope we come down and retest this propulsion gap and then bounce. If this is just going to screen through today, the upside target is just not there, is it? The upside target is 150 ADR. So ADR, you can start looking for signs of weakness. Somewhere around 100 to 150 ADR is where I would then start to think about finding some price action to get out on. But this market, it just doesn't want to stop today, does it? See if the US dollar's dropping. Difficult to tell. Yeah, Euro's rallying against the US. Pound's not really doing much, so difficult to tell. I think this is just the indices rallying. Euro, are you doing a lot either this morning? Odd market. Anyway, I'm grateful to find you. You brought me back on board of trading. You might regret that later, Peter. Did you know Greg Secker is called his project AI Trader now? Yep, he's jumped on. All Greg Secker is a marketer. He's a salesman, basically. So anything that is buzzword, he's going to sell it. Yeah, he's a good salesman. I don't know anybody that's made money trading his strategies or using his software, but doesn't mean they haven't. I just haven't met them. When you have taken 3 to 5 positions and start closing as the market comes back to your favor, do you always start with the highest, lowest one before you ask, I watched the video again on Saturday? So I close out what I think is the most unlikely to help me. So when you're doing drawdown control, you either pick whatever's, I always usually pick whatever's in the most drawdown or whatever has the highest lot size on. Yeah. So there's two reasonings behind that. DAX has really broken out the highs, so it's still going. The rate of drawdown that your account will experience is based on the amount of lots that you've got on. The bigger the lots going against you, the faster that drawdown is going to be. So I want to reduce this lot size down, yeah, as fast as I can. The amount in drawdown is, for me, not as important as the lots personally, but they both play into each other because obviously the higher the lots, the higher the drawdown will typically be. But say, for example, you have something like EuroCAD, for example, that let's say that was sitting in 3.5% of drawdown. Yeah. So if it's come down at a rate of knots and I open up that chart and I go, this has screamed down with no profit take move whatsoever. The RSI on the hourly is below the 20 level and it's at a propulsion gap, which is the first sort of move we've come to, which might act as support. If that is the worst possible thing I've got in drawdown at the moment, but it's at a beautiful point that looks like it might be the bounce for multiple reasons, I won't do drawdown control on that one. I'll do it on something else because something else might only have 0.5% of drawdown, but have way more lots on. So the potential for this to be more damaging because of the higher lot size is greater. It might not be in a lot of drawdown now, but if that suddenly turns tail and does an ADR in the opposite direction today, because of the lot sizing, that drawdown will grow faster. So you're just trying to keep on top of the percentage drawdown so that your account obviously is healthy, but the lots, because you're trying to stop the drawdown happening as fast. Yeah. So if you've got everything here sitting in 2% of drawdown and your account with 5 positions on is sitting in a total of 10% drawdown, but you've only got 3 lots on, if this thing pushes down 3 ADR against you, that 10% of drawdown is probably going to turn into 11.1% of drawdown. Yeah. If you're only sitting in 2% drawdown, like I was on Friday, and the entire market shifts and does 300% in the opposite direction, and you've got a hell of a lot of lot size on, that 2% will turn into 10% like that. So lot sizing is more important for me to reduce down. Number of trades, number of lots on. Because drawdown, we know when something's moved that fast and that hard for what, 1-2 days. So if you look at this as a good example, elastic band theory, it's perfect. 2 days, we've moved 284 pips. ADR on this is 90. Yeah. So in 2 days, we've moved 3 ADR. And it hasn't pulled back at all. It's literally just gone boom, boom. Yeah. No profit take move whatsoever. So in 2 days, the banks and institutions haven't taken profit on this move. And it's moved 3 times more than it normally does, it's a very high probability of a pullback. So this for me is not a contender for drawdown control. This is a contender for just waiting for this thing to bounce. Yeah, stick a fib on it and go, right, well, there's the last 2 days of movement. If it's going to do a shallow pullback, I'd expect it to get to there, exactly where my TP is, that propulsion gap. If it's going to do a medium pullback, I'd expect it to get there. If it's going to go deep, I'd expect it to get back into the second propulsion move that we had from the start of the move. Yeah. So I'm expecting it to do something like that, that, or that. If it does a flag, which is the 23.6 as I class it, yeah, that would be a flag break short. Nothing I can do about it. So if it's going to do that, I want to make sure that it's got less lot sizing on it, because if it does that, that is suddenly going to go into drawdown very, very quick if it's got big lots on it. If that was sitting at 5.5, for example, the difference between that doing that with 2.5 and 5.5 is double the speed of drawdown and double the amount of money in drawdown and double the percentage in drawdown. Yeah. So drawdown control, focus on that. But I teach in the bootcamp to watch this and focus on whatever is in the most drawdown, because it's easier. Because whatever's in the most drawdown, 90% of the time is what's got the biggest lots on, because that's what causes drawdown. High lot sizing in drawdown causes big drawdown numbers. So focus on, but just focus on it as a portfolio. Yeah. If I've got something in 3.5% of drawdown, as I say, that is just hitting a support level while the RSI is extended, it hasn't had a profit take for 3 days and it's done 4 ADR in 48 hours, I'm not going to do drawdown control on that yet, because the chances of a bounce are extremely high, because it's just got to do that. Yeah. So there's no right, again, as I keep saying it, there's no right or wrong. There's different. Yeah. Your decision to make. And there's nothing you can teach anybody to say, when this hits that, do that, because you're going to be in a different situation to everybody else. How has the SIH run on prop firms? How has it run on prop firms? I don't know. I don't run any prop firms. It will run the same on prop firms as it does on any account. It will just trade. I'm not quite sure I understand the question. What you get my boys for Christmas? I have no idea. I've just had one's birthday, so Christmas hasn't even started yet. I said to him this morning, now your birthday's over, get your Christmas list together. Euro yen, just looked at that one. That's an RSI extension this morning, so that's long. You'd have taken the 5-minute reversal this morning, which would have been there. You would have also had one there or there. That probably would have been your first entry. It's just gone sideways for a bit, so nicely extended. But these yens probably powering up, so you're probably going counter trend on these. I've got 7 positions on the euro, going to get some break evens on. Yeah. That's coming back. Oh, I missed it. Oh, gotta be quick. Oh my gosh. Can't operate this morning. Okay, out longs. I will re-hedge if it goes back above that high. I might actually have 4 positions to put on this, depending on whether I get triggered on the aggressive shorts. Close that out as well. Done. Give me a sec. So yeah, basically out the longs, profit banked. So looking for basically these limit orders that have triggered at the highs to push us back down now. We've got this little gap fill to do to the downside. Obviously, we had big rallies on Friday, so I'm looking for a pullback on Friday's move. Now we've got the gap done. See if we can get a leg down, basically. These indices are just fill. They've got to drop at some point. So I'd rather be short than long on everything index-wise at the moment. But go with the momentum. Any good funded trader programs? There aren't any. How do you calculate ADR or half an ADR? You take the average daily range of a period of time. It's all covered in the video. I've just put the video up on earlier. Go and watch that video on that page. Right, need to do some analysis. So, ADRs today. Quite a few. CAD Swiss. That one's already played out. You've missed it. So, big, strong push up on the Swiss franc numbers. You'd be hard pushed to get into that today. So, anything that hits ADR off of a fundamental news event like the Swiss franc numbers, you're just not going to get the reversal alert back to the other side, because usually those moves are so fast and aggressive and big, the reversal alert won't trigger. So normal daily movement is what the best trades are. It is pulling back, but obviously because it's a fundamental shift, the Swiss franc inflation figures have come down a lot more than expected. We would probably expect that Swiss franc to remain weak. So then you'd be looking for pushes back up again. Thanks for the follow. Hanazana, RJ Freedom Fighter. That sounds like a gamer tag to me. CAD Swiss, so that's extended. Euro odd. Got out of that one this morning. So that was a quick in and out. So there's your ADR hit, and there's your reversal. So nice, easy in and out on that one today. The reversal hasn't triggered, though, yet. As I say, because it's a big, strong move on the Swiss franc numbers. Obviously, the euro moves with the Swiss franc. So you wouldn't have got an entry, or you haven't got an entry on that one yet. You will be getting a reversal out on that there, though. So that's euro odd. Euro Swiss, also massive move on that one. You've just had the reversal alert. So that's hit 125 ADR. There's your reversal alert. There's your retest. There's your M pattern. There's your drop. So looking for it to come back and retest that level. So from the reversal alert, you'd be looking for something like a third of an ADR, which is going to be half an ADR is 26. That's 21. So 21 back down to support. Euro New Zealand, again, moved on the Swiss franc numbers. Haven't had a reversal alert on that one yet, but that's just hit ADR. So again, same as the euro odd. Australian dollar, we've got obviously news coming up this week. So tomorrow morning, 3:30 is the interest rate. The Aussies do throw the curveball in. So they're known for this. They don't like to do things the same as everybody else. We all go in 0.25%. No, they go in 0.1s and 0.35s because they're different. Hopefully there's no Australians in here. That was a really bad accent. But they do throw a curveball in every now and again. So unexpected rate decrease, unexpected rate increase, 2 months on the trot, unexpected rate decrease, 2 unexpected rate increases at the start when we started ramping 18 months ago. So they do throw curveballs in. So we want to be careful of this one. If that interest rate tomorrow morning comes out at 4.35, I think we will probably get a drop on the Australian, purely because the rate of inflation dropping. Nobody's going to be banking on the interest rates going up. So there's more of a chance, I think, of a drop every time you get an as expected interest rate announcement now. So yeah, and obviously we had the CPI figure for, was it New Zealand last week? Or was it Aussie? Can't remember. Which one was it we had last week? Oh, it's a monetary policy meeting minutes, wasn't it? I thought we had a New Zealand inflation, or was that the week before? Oh, it's the inflation expectations. We've already had an interest rate announcement this month. Why are we having two? Sorry, am I going mental or? What's the date? 4th. Okay. This is another interest rate. I didn't spot this. Why are we having two in 1 month? That's very unusual. Right. So be careful of this tomorrow. Not quite sure why we're having a second interest rate announcement from the Aussies in 1 month, but we are. Well, I suppose it's not 1 month, is it? It's November, the last one. So it isn't. It just seems really close together for me for some reason. Don't know why. Ignore me. I'm going mad, obviously. But yeah, that's quite close, isn't it? October, September, they are monthly. I'm getting them confused with New Zealanders. New Zealanders tend to release every sort of 2 to 3 months. So, but anyway, yeah, so just be careful with Australian. We got a big news event coming up tomorrow. So the Aussie and the New Zealand will move off the back of the interest rates. So anything you get into today, you could end up there, or you could end up way down there tomorrow. So, but that is nicely extended up to ADR. We are in downtrends on the euro now, and the Aussie and the New Zealand, obviously, very undirectional at the moment because their interest rates are high, their inflation is high. So you've got to basically be careful with these, especially in the run up to Christmas. If we suddenly get an unexpected interest rate change on the Aussie or the New Zealand, and they decide to go into month, 6-week rallies, which they are known to do, you could get stuck in a nasty sort of squeeze running up into Christmas. But that's an extension today. Pound odd is also extended. Again, same thing. Hit up into ADR, reversal. That's a lovely support resistance bounce. Look, pound not working. So you got bounce off of that level. This is a bounce off of that level potentially as well. In a downtrend at the moment. 5-minute reversal alert. Beautiful trigger. So yeah, looks good. Pound Swiss extended. Probably couldn't get into that one today. No, the reverse alert's all the way down there because the Swiss franc rate announcement. You've got Pound New Zealand again. That's nicely extended. Reverse alert just triggered on that one. And retest. Very, very quick retest on that though. So that one's pushing up nicely. Yeah, nice lower lows and lower highs. Look, market structure's very nice and sort of clean on this one. And US dollar Swiss, as we know. So got out of that US dollar Swiss with a large portion today off of a 150 ADR move. You're still not getting a reversal alert on this until we get all the way back down, another ADR drop in the opposite direction. So not going to get into that one. But this Swiss franc, I can see this finding some support down here somewhere and then getting a new leg up tomorrow at some point. So we'll see what happens. But with the euro weakening and now the Swissy having that news, so we've got two catalysts going here. We've got the euro traders now pricing in drops faster than expected. We've got the ECB coming out and saying we're done with interest rates. It's only going to go down. And now we've had the Swissy getting lower than expected inflation figures, which will say they can produce a faster drop on their interest rates as well. Everything euro and everything Swiss is down, which means you want to be long everything against those two at the moment. So just seeing if we've got any other news. Just seen some ECB news come in this morning. Nothing exciting from the ECB there, but right. So there's your ADRs. Let's quick look at the DAX. DAX coming down nicely. Out the DAX. So aggressive exit gone on, and I'm out. Done. Flat on the DAX. And take those pendings off. So out the DAX at the resistance bounce. We'll see where this goes. This could collapse and come and do this gap fill. That's going to need to do, like, there's ADR, look. So it's going to need to do sort of 150 ADR plus to get down there. So it's going to be quite a hard drop. If it's going to go down to that gap fill today, more likely, if we are going to do that and run that gap, it's going to take a couple of days. We'll be back down there tomorrow, maybe Wednesday. So we'll see. There we go. DAX all done. Right. RSIs. So these are going to be fairly quick to go through. New Zealand dollar, US dollar. RSI on the 4 hour. So we've got no hourlies to look at today at all. Totally flat. Hourly RSI on the 4 hour extended. Just above the 80 level again. Again, nice divergence on all these US dollar moves that we've had. Really nice divergence. Very bearish in this case. So US dollar kind of looks like it wants to have a little bit of a run, which is perfectly timed if we're going to get that drop in those indices. So nice, big, strong push there. We have stalled out for sort of 2 or 3 days. But danger with these RSIs when it suddenly starts to just reset itself back to 50, you've gone nowhere, is we just get one of those push, accumulation, push type scenarios, which is obviously what you need to scale into. So that's only just extended, so not a great entry. All the euros on the 4 hour are extended. Yeah, so these were extended on Friday. So you would have had signals on Friday to get in on the 4 hour. You would have also had signals to get in on Friday on the hourlies on all of these. Obviously, if you look at the hourly, massive extension on Friday. That's why I'm in and already out this morning. So all of these are still extended on the 4 hour or just coming out of extensions now. So the entries on these would have been either this morning or on Friday. Either way, you're in profit on all of them at the moment. So Euro odd, Euro CAD moving up nicely at the moment. Euro Swiss has moved up, just pulling back a little at the moment. Euro pound starting to run nicely. Euro yen, not so much. So we got some yen strength coming through this morning, which is overpowering the euro. And Euro New Zealand go in out on that one. Nice quick entry and exit. Australian yen is coming down. So this yen at the moment, we're having a big rally on the yen this morning. Everything coming down against the yen. Apart from the euro, which is holding sideways because that's pushing. Pound yen down. New Zealand yen down. US yen holding as well. So US is a little bit strong as well this morning. Wheels collapsed again. Look. So glad I'm not in this anymore. Watch this low today. Beautiful double bottom monthly coming up. So this is last month's low. It slammed straight through last week's low. So there's going to be limits triggering there. You'll be looking for a push up into that propulsion gap. OPEC could not come to an agreement at the meetings last week as to oil production cuts. So in turmoil, oil at the minute. Really in turmoil. The forecast we had from the banks was $100 a barrel by Christmas, which they then reduced down to $95 a barrel. And we hit $95 a barrel and we've cascaded down. So good luck getting back there in 4 weeks. Not going to happen, is it? So be watching this quadruple or sept. What's that one? 5 bounce bottom. I'm making it up. It's the bottom. Yeah. So we got a monthly low coming up here. If that monthly low breaks, we're just going basically into this balance. So there could be a bounce point anywhere in balance. But if we get down to the bottom of the balance area, that is 250 ADR away. We can get there this week. Yeah. Going to be going to need a hell of a drop in it to get there this week, but it could get there. So this is your level if that one breaks. And what's happened with gold this morning then? Come back? Yeah. So basically just reset on gold back to where we were Friday, where they closed. So just nonsense. Nonsense move. Cleaner. Fat finger. First Tuesday of each month for the Aussie interest rate. Yeah. I've had so much time off in the last month. I haven't had loads of time off, but I've just everything seems to be coming round really fast. It's like everything's going really fast at the moment. That just seemed like, you know, it's only a couple of weeks ago we had the interest rates. Yeah, it's 4. So yeah, spot on. Exactly when it should be released. I'm still in November for some reason. It's like I got to my birthday was at the end of November or 20th of November. So I got to my birthday, and ever since my birthday, I've been doing so much stuff. I've had the Queen's birthday. I've had 2 weeks of activities where I've been away for weekends and doing all sorts of stuff. I've lost those 2 weeks, basically. So this has come round a lot faster for me than anticipated. But yeah, I've got a feeling now they're going to drop it. Look what happened last time they tried to drop it. That was a big mistake. Who knows? We will see tomorrow morning. Mumo, for the MRA EA hedging strategy, the Bootcamp uses RSI 6040 and the H1 set file shared on Telegram uses reversals only. Yeah, totally different strategies. They're both hedging, but one uses RSI for extensions because it's on a low time frame. The other one just gets in on swings. What are the use cases for the two different approaches? What do you mean by use case? Well, they're just different variations on hedging, basically. That's all. So because you're trading, one of them trades on the 5-minute time frame, it uses the RSI to get in. So don't forget, mean reversion, we need an extension. So on the 5-minute time frame, if it goes sideways like that on the 5-minute time frame, you'll get reversal alerts like that. Yeah. So what we want is the market to get stretched and extended before we get into an entry. Like that one there, look. Big stretch and extension, pullback, profit take move. This is what we trade, profit take moves. So on the H1 time frame, it's just relying on the market bouncing. You get a lot less reversal alerts on an hourly time frame. So we're just taking the hourlies. If you wanted to, you could use the daily RSI extensions. But hedging is all about just getting into the market. Yeah, don't forget, every time you get a reverse alert, there's a 50-50 chance that reverse alert either holds and that structure shifts, or it's a pullback in a new leg down and that structure breaks. So all the hedging set file is doing is going, when that reversal alert happens, get me in long. Yeah. If I get a reversal in the opposite direction before I got to my profit taking level, get me in short. Whichever one gets me to my profit take first, take it off, and then wait for another reversal alert to scale into the one that didn't work. All it's doing. Are you still complaining about the cricket? I couldn't tell you what happened in cricket, Bradley. I don't watch cricket. Did we lose? I don't know. I don't pay any attention to sport at all. Formula One. If it's got a car and a motor, I'll watch it. If you've got a bat and a ball, I'm not interested. I'm one of those rare breed of men that doesn't like football or rugby or cricket or anything like that. Just not interested. I don't play team sports. That's why I'm a trader. Formula E, yeah, love Formula E. Yeah, anything with a motor. Even if it's electric motor, I've got an electric motor. My car's electric. So, does darts count as a sport? No. Although it's good fun to watch because it involves beer. So any sport that involves beer is also good. Darts, snooker, pool, maybe. It's not really a sport, is it? All the pool players are going to kill me now. A quintuple. That's it, Martin. That's what I was trying to get to. So oil is coming to a quintuple bottom. 1, 2, 3, 4, 5. You could class that as well as a 6. A 6 tuplet bottom. Golf, that involves a beer. That's good. The 19th hole. But that includes a ball and a bat. We just call it a club. So don't really like that. Anything that overlaps. But I mean, football overlaps with beer, doesn't it? But I just don't like watching football. Australian Supercars Championship. Yep, I watched the Holden Cup. That's how sad I am. I went to the Melbourne Grand Prix, and prior to that, we had the 911 Carrera Cup, and we had the Holden Cup. Good fun. V8s. Yeah, if it's got an engine, fine. If it hasn't got an engine, it involves a ball, not interested. And if you put a ball in an engine, not interested. Still got a ball in it. So if you put a football in a car, I wouldn't watch it. No, not interested. Golf? Yeah, no. Sorry, I've already done golf. Right, I'm going to leave it there this morning. So, yeah, banked a bit this morning, done some drawdown control. Still got a little bit more lot size than I'd like to. But it is what it is. So, news-wise today, we've got Lagarde speaking this afternoon, and that's it. So, now, after the ECB, after Waller coming out last week and saying we're done with interest rate rises, you could well find Lagarde comes out this afternoon and says we're done with interest rate rises, but, which is what the talking heads typically do. You get one member of the Fed comes out and says that, and then another member comes out and says what he meant was that, and then all of a sudden it does this. So we could find that all these ECB moves that we got from Friday last week all just suddenly flip. So just be a bit careful with that one this afternoon. There could be some big moves off of that. Other than that, we're waiting for the cash rate. So the big moves tomorrow are Aussie. So anything you've got exposed on the Aussie and New Zealand, be aware. So if you get to the end of day today and you've got like whatever sitting in profit on the Aussie, stick it down there. Because if that turns into a negative, you've lost it. If that turns into a bigger positive, these will all turn into positives. So you win and you win. If you don't bank that, you lose that potentially, and all of those go into more drawdown. So I always try and bank anything I've got on in any decent amount of profit. I mean, if it's sitting there in $50 of profit or something, scrap it. You'll not scrap it, but just leave it as it is. You've obviously got the option as well with things like this. You can take a more risky or more aggressive approach and put a break even on it. So that Aussie US, let's say it is end of day now, and I'm going to bed. I can put a break even on that position. There. That one there. And either that Australian dollar news comes out as negative, happy days, or it comes out as positive, and I don't lose anything on that one. But I also don't bank that. So your decision process, again, is going to be made by how your day, your week, your month is going, how your drawdown is. If you need that because you're struggling, bank it. If you don't need it because you're having an okay month, maybe break even it. Yeah, but you are either going to lose it or it's going to turn into a bigger profit. Or even worse, you're going to lose it and then it's going to turn into a bigger profit. That's even more annoying if it spikes up and then retraces 150%. Nothing worse than getting stopped out at break even before something goes and makes you 2%. Better to bank it or whatever it is. So just be aware, obviously, that is overnight. Yeah, that's it. So DAX is done and still dropping. So there was your bounce. Beautiful limit order triggers this morning. So yeah, watch for this area here today, which is ADR. So watch for a bounce at ADR. Potentially that is where we are going to move from. There's your propulsion gaps, which caused the breakout from that level. So this is your first sign of potential bounces. Okay, so I'll be back this afternoon at 2:20 as usual for the New York session. We'll have a look at US indices and how they're going. And obviously we'll have a look at FX again and see what's happened with these Swiss francs. But hopefully the Swissie's just going to drop now. But we got Lagarde, so half an hour before market opens. So just before I come on, Lagarde is talking, so be aware. All right, have a good morning. I'll be back this afternoon at 2:20 for the US session. Back tomorrow morning, 7:50 as usual for Frankfurt. And we'll see how we get on then. Have a good morning.